Nothing can stop me, I'm all the way up. All the way up. I'm all the way up. I'm all the way up. Nothing can stop me, I'm all the way up.
What is going on, superstars? It's Sam Kiss here again. Welcome back to my channel. In my previous video, I shared an 8-minute live recording on how to trade volatility 75 index signal in 2022. And after that, I got a request to do a full video on the strategy that I make use of to get over 100% profit on my capital within 2 hours. So in this video, you'll learn how to set up your charts like mine, and I will show you the strategy that I use that gives me 500 to 2000 pips within 2 hours while trading volatility 75 index on my smartphone. If you use this strategy consistently, you'll be able to grow your account from as little as $50 to over $1,000 really fast. To get the best from this video, I recommend that you watch it to the end and then you pay close attention to every detail. You can use the timestamp to navigate through the chapters of this video. In case you miss any part, you can always rewind and watch it again. Before we get started, if you are new to my channel and you would like to see more of my videos, please like this video, subscribe, and hit the notification bell. And also let me know in the comments your name and where you're watching this video from. You can check the description of this video to get links to join my Telegram and Instagram community. With all that said, let's get started. Before I start trading volatility 75 index, the first thing I want to do is to identify the chart on the higher time frame, which is the daily time frame or the weekly or monthly time frame, but I would just rather stick with the daily time frame. Now when I do this, I want to identify the market structure that we got there. Is it a trending market? Is it a sideways market or a chopping market? I got to identify that so that I will know the levels that I'll be looking out to get entries on in the market. Now, after doing that, the next thing I want to see is what are the points where we have strong support and resistance in the market. Currently, I can see that we got strong resistance at the top right here, this point here. You can see there's resistance there. And also at the bottom, there's a strong support right here. You can see how price got rejected here. You know, if you track that down to this point, you're going to see rejection right here too. So I want to identify the support and resistance zones that we can really see in the market on this time frame. You can see this rejection here tallies with the rejection that we had at this point here. That shows that this is strong, a strong support. Then after doing that, I want to go into the smaller time frames, just a step below the daily time frame, to see if we can get a trend line, right? To see the pattern that we can see in the smaller time frame. All right, so looking at the H4 this time, we can see the pattern that we have in the market, which actually tallies with a downtrend. And in addition to that, on the H4, we can still see some support around this particular zone. Now every time frame gives us support and resistance. Every time frame, you will see several of them on various time frames. If you go down into the 1 hour time frame, you're definitely going to see the support and resistance zone. You can see a resistance at this point here. So I'm just going to get the hour, I'm just going to get a horizontal line to put up a resistance there, and you can see the same thing happened here, right? The same reaction from that resistance point in the past came here, we see the resistance, and the same thing happened here. You can see price falling down. So primarily, you want to identify the support and resistance zones that we got in the market, and also you want to identify the trend lines. So at this point, we can see around here there was a trend here that got broken at this point and it got up, and right now I can still identify a trend from this point here. So I'm just going to get horizontal line tool, the diagonal line tool. I'm going to merge up the 2 points, and I'm going to do that again at the bottom. You can see we have something that looks like a channel, close to a channel, and I got this, it's so clear. I got this on the charts and I can see it. So I'll be looking out for price to get to these levels, because these levels are the points that are going to give me sniper entries. So what are the sniper entries? Key levels of support, resistance, and trend lines. Now, before I place any entry in the market, which I love to do in the smaller time frames, the first thing I want to do is to identify my money management plan. risk management. The longer you want to stay in the market is dependent on how you manage the money you start off with. All right, so I'm going to show you how to manage your money and proper risk management on the next chapter. Risk management is all about risk and reward. You are risking a portion of your account size to get a potential reward. So it is either you are risking $20, right? If you're risking $20 to get $100, right, which is 1:5. That is the risk to reward. All right, you're risking $20 to get $100, or you're risking $20 to get $200. If you're getting $200 here, that is a 1:10. All right, that is how it works. So you got to identify your risk management before you do what? You enter the market. So how do you go about the risk management? You need to identify how to calculate pips and also what lot size you're going to use with respect to that. Because in the risk management or profit and loss formula, you need two factors, which is the pips and also the lot size. Before we go there, let's see the formula for profit and loss, which is going to help you to know exactly what your risk is going to be in the market. To calculate your profit and loss with respect to your lot size and the number of pips that you got, you just want to use a formula, $, then $10 times the lot size times the number of pips that you got. Okay, times the number of pips that you got. Now, let's say, for example, if you got about 200 pips on volatility 75 index and you used a lot size of 0.001, okay, and you want to get the profit, what's the total profit you got on this? All you need to do is to get the $10, 10 times what? 0.001 times 200, and that will give you what? $2. So that is the formula. Now, the challenge a lot of traders really have is they don't know how to identify the P position on volatility 75 index. Now I'm going to show you how to identify pips, and after that we're going to look at the lot sizes available on volatility 75 index. All right, to calculate pips on volatility 75 index, all you need to do is to take a look at the price quote. How many digits do we got on the price quote? You can see that we got 6 digits before the decimal point, and after the decimal point we got 2 digits. So with that, we'll be able to deduce the position for the pips, and after that we're going to be able to calculate the number of pips that could be traveled per time. All right, this is it. We're going to look at a price quote. Let's say we have 865521.35, right? From this price quote, the pip position is this, the 2 that you got there. Then the digits after the 2 you got here, which is 1, this is called the pipette. All right, now if price travels from 8655 to 866521.35, then we'll say the price has gone up by what? 200 pips, right? That is 200 pips. Now, how do you get to identify every of these without getting to get a piece of paper and calculate, do the mathematics? Now, the MetaTrader 5 application has really helped us to get that done, and you can achieve that by making use of a tool called the crossbar tool. I'm going to show you how to make use of this crossbar tool. Now, look at this. We got from this point here to the bottom right here. Let's just pick up this bottom right here. You can see the crossbar tool is showing us after the forward slash, right, you're seeing 62256.28. Okay, now from this value, I'm just going to get this so that I can write it on the screen and we can get it clear. We can see 62256.28. From this value you see here, that is the difference between the two price quotes. The P position, remember I told you that the P position is the second digit right here before the decimal point. So this is where you start calculating. This is a pip. So from here you have the unit value. Here is the 10. Here is the 100. and here is the 1,000, right? This is the 1,000. So this means that the number of pips traveled is 6,225 pips. Okay, 6,225 pips. Now, if you want to calculate from this value here, the 6 here, it is no longer going to be pips, it's going to be pipettes. So that way you can say that price has traveled 62,256 pipettes. And that's how it works. But we are not going to be making use of pipettes while measuring and checking up the price, checking up the profit and loss. We're going to be making use of the pips. So the pipette, this digit right here, becomes irrelevant at this time. So we have move of 6,225 pips, right? We've been able to identify the pips in this. Now we're going to go on to see the lot sizes that are available on Volatility 75 index. On Volatility 75 index, the minimum lot size available to take a position is 0.001. And this is one of the reasons why it happens to be one of the most traded pair or one of the most traded symbol in the synthetic indices. Because if you got as little as $5 or $10 or $2 or $50, really small amount of money, you can open a position on this particular asset. Now, what does 0.001 mean? Let's go through the value of every of these lot sizes. When you see, I'm just going to clear off this and I'm going to bring this back. When you see a lot size of 1.00 or whatever, 000, 3 zeros or 2 zeros, when you see that, this is called a standard lot. It is called a standard lot. And a standard lot represents $10 per peep. $10 per what? Per peep. That is the value of a standard lot. Okay. Now, when you see a lot size of 0.100, that represents a mini lot, right? It represents a mini lot, and the value of this is $1 per peep. Okay. And when you see a lot size of, I'm going to clear this off, and when you see a lot size of 0.01, just like this, so if you put a 0 in front of it, if you want to do that, that's fine. That means a micro lot. Okay, the micro lot represents 10 cents per peep. So I'm going to put the cent symbol, 10 cents per peep. Remember that 100 cents equals $1. Okay, take note of these values. So when you now get the final one, which is right here at this point here, I'm just going to clear up this and we're going to bring it in again. When you see a lot size of 0.001, this represents a nano lot, and the nano lot is equivalent to what? 1 cent per peep. 1 cent per peep. So how do we get every of these things together? How do they relate? How does the nano lot relate to the micro, and the micro to the mini, and the mini to the standard lot? I'm going to show you that right now. So we got every of the lot sizes here. So we have 0.001, and we'll have 0.01, and we'll have 0.10, and we got 1.00. Every of this is a tenth of the one above it. All right, so this is a 1/10 of this. So that simply means that 10 of the nano lot size will give you 1 micro, right? And 10 of the micro lot size will give you 1 mini lot size, and 10 of this will give you a standard lot size. And that is how every of this lot sizes really play out. So the next thing that you want to do as a trader who wants to trade Volatility 75 index successfully is to identify the lot size that you are going to be making use of when you are trading this asset on a particular account balance. And I'm going to show you that right now. Right now, we're going to be looking at a particular account size and how much you should be risking, or perhaps what lot size you should use when you're trading it. Okay, let's take $100 account. For example, you have $100 account. The rule of risk manage is do not risk all of your account size in one trade. What you want to do is to risk a part of your account size or your account balance in a trade. Some people like risking 2%, some risk 5%, some risk 10%, some risk 20%, right? Do not risk more than what you can see on the screen right now. Okay, if you really want to last long in the market, you want to keep it simple. All right, and one thing that I found that is the higher your account size, the smaller you want to risk. For example, if you're trading with a $10 account, you know, if you're risking $2 on a particular trade on a $10 account, that is equivalent to what? That is exactly 20% of your account. You got that now? So that is if you want to identify this. So on a $100 account, if you're willing to risk 2% of your account on a $100 account, what is 2% of $100? That is exactly, if you got 2% of this, it is exactly $2. All right, $2. Now let's clear this off. I'm going to erase this and I'm going to bring this in again. What we're working with is a $100 account, and we have decided that we want to risk what? 2% of a $100 account per trade, and the 2% is exactly $2, right? So what is the lot size? I have decided what I want to risk. Your risk is up to you, guys. It is up to you. The risk is like a seed that you plant in a farmland. All right. Sometimes it's going to germinate. Sometimes it's not going to germinate. Right. But when it eventually germinates, it's going to give you a huge tree that gives you a lot of fruits. If it doesn't, it just dies off. All right. And that is why whenever you trade, you don't want to risk a whole lot. You don't want to risk the entirety of your account balance, because price may go against you. And always make use of a stop loss. If you're buying at the low here and you're anticipating price to come to the stop here and it doesn't go that way, you bought here and it starts going down, right? Get a point where you're going to stop. Risk little and gain much more. So like I started, when you want to start trading, you want to look at a risk to reward of 1:2 minimum. So let's say you're risking $1 to get $2. You're risking $2 to get $4 minimum. Okay, so that if you take 3 trades and the first one goes against you, the second one goes against you, the third trade could actually put you back on a break even. And that's how it goes. So now let's go back to see what lot size do I want to make use of while trading on this $100 account. And since I have decided that on a particular trade, I'm going to be risking just what? $2. Just $2, right? So let's get over this. Now we can see that $2 risk, and we have the minimum lot size available on volatility 75 index being 0.001, which is 1 cent per pip. If you do 1 cent per pip times 200 pips, right, that is going to give you what? That is going to give you $2. So right now, for you to trade a $100 account and risk 2%, that is $2, the lot size that you're going to be using is what? 0.001. You got a $100 account, right? And you're willing to risk 10%. 10% of $100 is equal to $10, right? What lot size could you use to achieve this? There are several ways you can achieve this. It's either you are risking with a 0.001 lot size, you're risking 1,000 pips. That is going to give you $10. Or if you want to use a lot size of 0.002, you're going to be risking just 500 pips to get what? $10. Or if you're using a lot size of 0.005 this time around, you're going to require just 200 pips. That is what's going to take you. All right. So you got to identify the quantity of pips required. When you see that the pip is so value, you now equate it with the lot size you're going to use so that it will give you a total of what amount of money you have decided that you're going to risk. Now that you know your risk management, the next thing that we want to go into is to identify the strategy that you're going to make use of to trade this market. And I'm going to show you my Deriv killer strategy. Let's go over to see the indicator settings. Now, before we make use of the indicators and we get into the indicator settings, it's important that you note that using indicators alone is not what will make you a successful trader. For you to be a really successful trader, you should understand price action. And that's what we talked about at the beginning of this video. We talked about identifying support and resistance level, the trend line of the market, and also having a good understanding of candlestick patterns will really help you to maximize this. This video is not going to be talking about candlestick patterns. We're going to talk about that on some other video. So if you don't want to miss that, ensure you subscribe to the channel and you got the notifications turned on. And you can as well, the description of this video, to see a link to join the Telegram platform, because we post a lot of updates there. And whenever we got a new video, you're going to get the updates in the Telegram channel. All right, let's go on to see the settings of the indicators that I have on my chart right now. This strategy requires 3 indicator windows. The first thing you need to learn right now is, how do I create an indicator window? That's for the beginners we have here. To create an indicator window, all you need to do is to click on the main chart right here and you add an RSI indicator. The RSI, which is relative strength index, or the stochastic oscillator, any of these two automatically creates a new indicator window. So we're going to be working with the relative strength index. If you create this and you just put on a period 1, look at this, done. You can see that at the bottom we have a new window, which is the 4th window at the bottom right there. But right now we are not going to be using that. We already have the indicator window that we need. So what we're just going to do is to delete this, and I'm going to show you the settings, right? I'm going to show you the settings of that. Let's go on to that. Now we have the RSI. Let's do this to make this video faster. We have the relative strength index. The period you're going to use on relative strength index is 14. And you're going to apply to close, style, 3 pixel, and then we'll have the levels 90 and 10. After doing that, you want to click on the main chart again, and then you add an indicator window too. How you do that is by adding relative strength index, just like I just showed you. Now, the relative strength index in this particular one, the setting is period 1, and the apply to close, we have style 3 pixel black, the levels remaining 90 and 10. Then we're going to introduce 4 moving averages on this same window. Remember that when you wanted to add the RSI, you clicked on the main chart, the plus sign at the right end of the main chart. You clicked on it. Look at this. This is what you clicked on when you wanted to add the new indicator window, that is the RSI. But this time around, when you want to add the moving averages to indicator window 2, you're going to click on this, the one that is next to the indicator window 2, and not the main chart. So when you click on that, you're going to select the moving average on the list, and the first moving average that we got is the moving average with period 50, shift 0, simple, close, and you have 3 pixel red. The level has nothing on it. Then the next period, the next moving average is the moving average 2, shift 0, simple, close. We have 3 pixel lemon green. Then the next one is moving average with a period 3, and we'll have simple, and we'll have close, and it has the color orange with 3 pixel, of course. And the last one is the moving average with period 5, 0, simple, then we have 3 pixel black. Now this makes up the indicator window 2. Then the final indicator window is the one containing the MACD. So how do you achieve this? The same way you created the RSI window, that's the same way you're going to introduce this window. So all you want to do is to click on the main chart, right? You click on the main chart and you click on that sign. And after you do that, you look for MACD, all right? You look for MACD, and the settings for the MACD that we are making use of here is 12, 26, 5. that is what we got. We got the colors 1 pixel blue and 3 pixel red. Exactly like this is how you're going to make use of it. And when you got that done, you're going to see it on your chart this way. So at the top here, we have the main chart, and right here we have the indicator windows. And this is how you can set up your chart. The next thing we're going to see is what are the conditions for making use of this strategy. When do you buy? When do you sell? Because that is all we do in this market. We just buy and we sell. I'm going to show you on the next chapter. Now, to trade the markets, making use of this Deriv killer strategy, you are looking out to points where there's going to be a major reversal of a trend. That is the first thing. So this first condition doesn't even require, it doesn't require the indicators. It requires your understanding of the chart. So you're looking for where a swing is going to end, and you're looking to rock the reversal to the downside. All right. So another thing that's going to help you to confirm when a swing is ending is the indicators this time. All right. The indicator that's going to show you that is, I'm going to bring this in. You can achieve that making use of the second indicator window. Let's expand this. Look at this, guys. Let's get the vertical line too. This is where the swing got to an end, right? We got the upswing. This is where it got to an end. Price got to this top here. The rally from the bottom to the top ended right here. Now let's see what we got on the indicator windows that shows us exactly that that's the point the price is going to what? To reverse. Now we're working with this on the 15 minutes time frame, and the zoom level is zoom level 1. All right. Now you can see that on the second indicator window, we have every of the small moving averages converging at the 90 level of the RSI. You can see the second window contains the RSI and moving averages. Now we got every of the small moving averages converging right here. All right. That is it, guys. That is it. That is the first condition. You need every of them to come, and that's the second condition. All right. This is just to confirm the first condition, which is you want to see price getting to the end of a swing. And the second, we want to see that confirmation on the set of moving averages. You want to see them converging here. All right. Now, the third condition for this strategy requires the RSI window. That is the indicator window 1. All right. What we want to see on this indicator is what we call divergence. This is an uptrend. So what we'll be looking out for is divergence. Look at this. I'm going to explain that right now. You can see price is creating higher highs on the main chart, but on the indicator window 1, that is the RSI window, we can see the price is creating what? Lower highs. Okay. So this is the third confirmation. This is the third confirmation. All right. The final confirmation now, which is the fourth confirmation and the fourth condition, is just to confirm what we got on the RSI. Both of them should be giving us the same thing. Look at this. On the third indicator window, which is the MACD, you can see the same thing. Can you see it right here? Can you see it right here? You can see the divergence. It is sloping to the downside while the main chart is sloping upwards. And these are the 4 conditions that you're looking at for. The first one is to see that the main chart is giving us the end of a swing, a rally, or a deep movement. Then confirming that, making use of the indicator window 2, seeing the moving averages get into the 90 level of the RSI, and you're looking for opportunity to sell. This is just a confirmation. Now, for me to get the entry, there's something that I do to get sniper entries that really don't take me in loss, and it takes me all the way down in profit if I want to sell in a situation like this. And I'm going to show you that on the chapter where I talk about my entry technique right now. In this chapter, I want to talk about my entry technique. After taking a look at price on the higher time frame, like we got the 1 hour time frame or the daily time frame. Right now, the daily time frame price is way far from, let's look at this. I'm going to delete this. and also delete this. If you look at the daily time frame, price is really far from a key level. So what we want to trade right now is, let's say, the 1 hour time frame or the 15 minute or smaller time frames, identify zones. Now after I get into the charts and I get to remove let me do the settings. Let's remove the period separators. Okay, so we got that out. Now after I get into the chart and I identify support, resistance level, or perhaps a trend line in the market, right? That is very important. Or let's say I identify a supply and demand zone. This is a trend that just got created. So let's just assume that this trend was not here already. We didn't see this rejection at this point here, right? Let me bring out this arrow. We didn't see the rejection here. Price hasn't gotten here yet. Now we are looking at for a level where that rejection is going to happen. We can actually make use of the concept of supply and demand. Supply and demand simply means the difference between two levels of rejection in time past. So we have this level right here, and we can see the one directly behind it is this place here. So to get the supply zone between this and this, all you want to do is simply get a box, pick up the top of this. I'm going to get the top of this one here, and you get the bottom of this, the top of the one below. So you have the top of this here, you have the top of this here, this week that showed rejection, and then you pull out. Can you see this? You pull out the box to the right side. Whenever price gets into this box, whenever it gets here, it's going to be rejected, it's going to sell. And then now you put your stop loss just above this box here. Okay, that is it. But I don't just enter by seeing this here. There's something I do. The time frame that I place my entry is the 1 minute time frame. And there's a lot of revelation here, right? If you pay attention to this, you're going to catch the revelation. The 1 minute time frame or the 5 minutes time frame. Let's look at the 5 minutes time frame. Look at this here. Now, for you to get this successfully, either you're looking at the 1 minute time frame. As you can see in the market, we had a lot of contraction in the market. This is the 4th of December, and in time past, we had the previous day, we had about several contractions. You see price coming close to each other. So trading on the 1 minute time frame and going to give you a very good indication. That's why we're looking at the 5 minute time frame. On the 5 minute time frame, guys, 5 minute time frame, we can see a setup. This same strategy is what I want to apply on this time frame. Now I know that there is a sell power inside of this zone because it's a supply zone. Then I'm looking out to see the strategy on the 5 minute time frame. Okay, the first thing, I can see that there is divergence. Let's get this, guys. I can see there's divergence. You can see price is sloping downwards on the RSI, and the same thing, price is sloping downwards right here. So I'm going to get an arrow too, so you can see it, guys. Price is sloping downwards in the 5 minutes, guys. It's massive. All right, we can see the slope at this point. So the next thing you want to do is, you got this. The next thing you want to do is look at this second indicator window, guys. It's mind-blowing. It's really mind-blowing, right? Take a look at this. The point, I repeat, the point where price converge and touch the 90 level of the RSI here, it touched it, and what price now crossed, we got the smaller moving averages now crossed at the 90 level. They crossed the 50 MA, that is the red one, is the 50 MA. It crosses it. That point is your entry point. It is your entry point, right? So how do you identify this on the main chart? Look at this, guys. This is the revelation. I want to show it to you now. Pay a close attention. This is the part that I was talking about at the beginning of this video. I said pay very close attention to every detail. Pay close attention to every detail. It is important. If you do so, you're going to get the revelation. And that's what I want to show you here now. Pay close attention. Look at this. After the cross, I'm zooming in very well. After the cross, you want to look for a pin bar. You want to look for a pin bar. As soon as you see that pin bar, you execute on the next candlestick, and then you put your stop loss above the wick of that pin bar. That stop loss position is going to be your risk. You can see this is just 150 pips risk, and you can see the reward, 1,250 pips. Can you see it? That is about 1:10, or even Yeah, 1:10. That is the reward, guys. This is the revelation I want to show you on this part. I hope you got huge value from this video. Feel free to drop your questions and comments in the comment section below, and also let me know what you'd like me to talk about in my next video. Thank you for watching. My name is Sam Keys and I'm always here to help.
Nothing can stop me. I'm all the way up. All the way up.